This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Live from the Bloomberg Interactive Brokers studio, streaming on YouTube. It is April Fool's Day.
It is, but it doesn't feel like it.
No, it's also opening day, and it doesn't feel like that, too, because games are getting canceled.
Yeah.
I know. A little bit of COVID, a little bit of rain, a little bit of all that stuff.
But how about that S&P 500?
Yeah, surging to a record, past 4,000, no problems out there. Everything is okay.
Yeah, increased stimulus in the world's largest economy, fueling optimism about that global recovery.
Yeah, we're going to talk about that. We're going to talk about anti-vaxxers. We're going to talk about the latest on COVID-19. We're going to talk about jobs, infrastructure, leadership with two former White House officials, and then wine.
A little bit of wine to kick off this 3-day weekend.
There's a jobs angle, so this is straight.
Yeah, this is work.
On the money.
Okay?
It is work. All right, working really, really hard this week is Doug Krisner. He's going to give you a check on the trading day. Hey, Doug.
Hey, you're talking about the S&P at a record, 4,011, so we're above $4,000 for the first time. I'm looking inside the benchmark using the WEI function on the Bloomberg terminal, and you look at energy, information system stocks also moving higher, communication services. Now, the energy story is correlated to a rally in the crude oil space. WTI right now, 61.45. This is after OPEC Plus agreed to increase production gradually from the period between May and July. Dow Industrial Average, though, is only up 0.5%. Information tech strength sending the NASDAQ comp to a gain of about 1.5% right now. We're also seeing a drop in long-term interest rates, 10-year Treasury yielding 1.68%. Now, this is the last trading day of the week, given Good Friday, and even though the market is closed, we're going to get that March employment report tomorrow, the data expected to show the quickest pace of hiring in 5 months. But then look at this morning's numbers on weekly jobless claims, an unexpected increase on that front. And with a drop in rates, a weaker dollar. We've got the Bloomberg Dollar Spot Index down about 0.3%. I'm Doug Krisner. That's your Bloomberg Business Flash.
Got it, Doug. Thank you so much. You're listening to Bloomberg Business Week. It is time now for the Market Drivers Report. And let's set the Business Week agenda. Dave Wilson, stocks editor at Bloomberg News on the remote access in New Jersey. Mike McKee, international economics and policy correspondent. Dave, let's just start with you. Just quickly kind of an overview, because we have the S&P through a record.
Yeah, and we have a second day in a row where big tech is leading the way. I mean, you go through the 11 main industry groups in the S&P 500, you certainly see that. I mean, Doug Krisner already mentioned what was going on with technology stocks specifically. They're the best performers aside from energy in the S&P 500. Then you look at what else is higher. You see communication services, which includes the likes of Google's owner Alphabet and Facebook, and consumer discretionary, this catch-all category, where you find the likes of Tesla and Amazon.com. So, it's kind of
it's like my shopping bag. That's what it's like. It's Amazon and Tesla's. That's it.
Yeah,
no, it's not.
Absolutely. It's like, you go to the dance with whoever brought you, and it is clear that it is those companies that brought the S&P 500 to this point. I look back at the index's move from 3,000, which it first surpassed in July of 2019, to 4,000, and you see that
crazy.
The 5 biggest companies by market value, and names I've already mentioned, they accounted for 40% of the S&P 500's gain when you put them all together. So it is a really focused advance still, even though it's clear that the first quarter was a bit of a departure. The second quarter is starting out the way the first quarter ended, with big tech at the forefront.
Hey, Mike McKee, come on in here and talk a little bit about the economic data that we got this week. ADP report yesterday, initial jobless claims unexpectedly increasing this morning. And then, of course, we're getting the March job numbers tomorrow. How is this manifesting in the trade today?
We saw a little reaction when the jobless claims numbers came in weaker than, worse than expected, put it that way. Not weaker, because they were up at 719,000. But that kind of went away when we got the ISM numbers. The ISM manufacturing was the strongest since 1983.
Wow.
The only trouble is, and this ties it all back together, is that when you look at the manufacturing employment numbers, they're still way down from where they were before the pandemic. So we'll see what kind of numbers we get tomorrow. The expectation is for 35,000 manufacturing jobs. But if we're seeing manufacturing reopen without adding people, then that's not going to be a big help.
Hey, if we get, Mike, that change in non-farm payrolls, we're looking for, what, 650,000 according to the latest count I'm looking at the Bloomberg. That will tell you what, if indeed we get that number, or even better, what will that tell us about where we are in kind of the bounce back from the pandemic impact on the U.S. labor market?
Well, the thing that people are saying is March is going to prove to be the month where we really started to turn around. February was a bit slow. We had a little bit of a surge in cases, plus the bad weather. And then March is when they thought people were really going to start getting their jobs back, and a lot of states reopened. So it would be confirmation of that. Now, some people are predicting as many as 1 million jobs were created in March. And if you want to get back to where we're about 10 million short of that, then you're going to need 1 million a month if you're going to do it by this time next year. So we could and should be looking for very large numbers. Whether we get it or not, hard to say.
But Dave Wilson, markets are closed tomorrow. So we're not going to see a market reaction happen like we usually do if a jobs number is surprising.
Well, we will in the bond market, right?
Bond market, yeah, sorry. Equity markets, I should say. Excuse me.
The stock market will be closed. I mean, it's unusual. You know, if you have one or the other like that, it's usually the bond market that's closed for things like Columbus Day and Veterans Day. And, so we will get a reaction. It's just you may have to, look at the futures trading on Sunday night to start to really get a reaction out of the stock market.
Well, but having said that, Mike, but Tim brings up a good point. We will, though, while we wait for the equity markets, we will see something in the bond market tomorrow. And will it be significant in your view, potentially?
I don't think so,
okay.
unless there's no numbers, unless it's really bad. The markets are pretty much priced in the idea that it's going to be good. So I don't think you're going to have any significant reaction. Also, well, let me back off, and Dave would know what I'm talking about. This is a market holiday for equity traders and for anybody who's a senior bond trader. It's all going to be the junior people. The volume is going to be way down. Yeah. There isn't going to be as much liquidity. So if you do get a move, you could have a bigger move than you would otherwise.
Hey, Mike, just real quickly, just about 30 seconds here. The infrastructure program that we heard about from President Biden yesterday, how do you think about it when you look at the economy, what it could do to help the economy? How do you see it?
Yeah, this is going to be different. This isn't going to be the support program that they passed to give people money right now. This is designed to build the economy's potential. And that you won't find any economists who would argue that it's a bad idea. It's really only a question of how you do it and how you pay for it. Right. And that's going to be the big question down in Washington.
All right, Mike McKee, thank you so much. You're working tomorrow, right?
I am in tomorrow, yes, indeed.
We need you for that stuff. All right, Mike McKee, international economics and policy correspondent at Bloomberg News. Catch him tomorrow breaking down that jobs report. Dave Wilson, catch him later on because he's going to do the chart and stock of the day. Should we do the bite of the day?
Let's do the Bloomberg Business Week bite of the day. It's one number that tells us a lot. It's brought to you by GEP. GEP helps businesses transform supply chains with strategy, managed services, and AI-based cloud-native software. Learn more at GEP.com.
Kind of love this one. Today's number is 1 million. Miley Cyrus is promoting $1 million. Wrecking Ball, not my style. Miley Cyrus is promoting $1 million of stocks offered by Square's Cash App. Fans can enter the giveaway by commenting on her Twitter or Instagram profiles. Those who took up the offer are already seeing free shares in their accounts, and Tesla was among the most commonly requested. It's the latest illustration of how equities are gaining pop culture cachet. How crazy is that?
You're not going to sing Wrecking Ball.
No, I'm not. But I like her. I think she's kind of cool.
Yeah, she is. And
she just did a bunch of covers, too, right?
Yeah.
Yeah, like rock covers.
Maybe really cool. Dave Wilson's song of the day will be Miley Cyrus.
Or you're thinking it could be...
Who
just sold like their...
It was today. Oh, Paul Simon.
Paul Simon.
Yeah, that's what
Let's
it was.
see if it's that. Coming up, folks, we have some great voices. We've got Dr. Amish Adalja over at Hopkins. We're going to talk about COVID with that. We've got two former Obama campaign administration insiders. Chris Liu, he was former Deputy Secretary of Labor under the Obama administration. And Henry DeCio, he was the former CEO of the 2008 Obama campaign. He's got a new book out.
All that and more coming up on today's show. In the meantime, let's get a check of world and national news with Nancy Lyons in D.C. Hey, Nance.
Hey, Tim. The administration is going all out to gain support for President Biden's ambitious plan to rebuild the nation's infrastructure well beyond the national highway network that was advanced in the days of President Eisenhower. Bloomberg's Irv Chapman has more.
Infrastructure includes boosting domestic manufacturing in the proposal, White House economic advisor Jared Bernstein said in a Bloomberg interview.
We define infrastructure quite broadly here to include not just roads and bridges, but also clean energy, housing, tax credits, and incentives for R&D and innovation. We do a very deep dive into the production of not just electric vehicles, but charging station and batteries here in this country.
Bernstein said a key goal is to grab market share worldwide from America's competitors. In Washington, Irv Chapman, Bloomberg Radio.
George Floyd's girlfriend took the stand today in the trial of former Minneapolis police officer Derek Chauvin. Courtney Ross admitted she and Floyd struggled with drug abuse. She was asked about it by defense attorney Eric Nelson.
You and Mr. Floyd both had a struggle with opioid addiction.
Yes.
And there would be periods of time where you would both be using, and there would be periods of time where neither one of you would be using, right?
Yes, that's correct.
Nelson is expected to use Floyd's drug use as a possible cause of his death instead of Chauvin's knee on his neck. University of North Carolina men's basketball coach Roy Williams is retiring. He's been at the school for 18 seasons. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
I just think we should start with the wine segment. I'm just going to tell you, we're going to talk to Paul about this and just think about maybe we start Fridays with the wine segment and just kind of...
Can we do that? Is that okay, guys?
To be continued. Okay. Listen, lots of virus headlines. We're going to get into it with Dr. Amish Adalja over at Johns Hopkins in just a moment. But Pfizer's COVID-19 vaccine remaining highly effective after 6 months. This caught my attention this morning. This is according to new long-term results that the company said could be used to seek an expansion of its regulatory status. Listen, we have been talking about this. So how long does the vaccine kind of keep us safe?
We're watching this play out in real time, Carol. These are vaccines that have been approved for emergency use authorization, and we're watching the science play out in real time in front of us. This is data from a follow-up from a final stage trial of more than 46,000 people, and it showed that the vaccine was 91.3% effective in preventing symptomatic cases starting 1 week after the second dose through as long as 6 months. And here in the U.S. alone, the efficacy rate was 92.6%. That's according to a report on Thursday by Pfizer and BioNTech.
This is stuff that in a normal world, right, it would have all kind of happened
because
over
it would have
time.
been part of the actual approval process. And this is something we'll talk to Dr. Adalja about.
And not the emergency use, right, authorization
exactly.
That kind of sped everything up because we needed it. So there's that going on. At the same time, I was reading through a bunch of COVID stories, parts of the world that are kind of continuing to roll back restrictions and open up their economy. Meantime, you look over in Europe, you look over in France, you look at Major League Baseball around the United States. Opening day, it's today, and we're seeing the game between the Mets and the Washington Nationals. That's been postponed due to COVID-19 protocols. MLB.com putting that out today. So it's just a reminder that, yep, we've made progress, but testing and, keeping distance, wearing masks is going to be necessary because we're not out of the woods by far.
We're not. And you mentioned what's happening in other parts of the world. Chile is planning to close its borders for the entire month of April. This is a dramatic escalation of the fight against its worst coronavirus outbreak to date. And the epidemic could peak within 17 days in France. That's according to the health minister there.
All right, we're going to get you the latest on COVID-19 and that vaccine rollout that's coming up on Bloomberg Business Week.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
It's the first day of the second quarter. We've got the S&P 500 at an all-time high right now. The benchmark at 4,011, so we're above $4,000 for the first time. Energy out in front of this advance, and it is very much connected to what is happening in the crude oil market. WTI right now in the New York session up by more than 4%, 61.58. This is after OPEC Plus agreed to increase production gradually from the period May to July. There's also around the edge some conversation about infrastructure stimulus today. Minority Leader McConnell in the U.S. Senate saying that no Republican support will be received for this plan. Micron Technology trading higher. The chip maker late yesterday gave a bullish sales forecast. Earnings forecast was also bullish. Analysts were especially positive on pricing trends for DRAM chips as well as improving demand from enterprise customers. And Apple shares being heavily traded today. The stock was upgraded to buy from neutral over at UBS, and the firm cited a more stable long-term iPhone demand story. And at the same time, UBS cited the option value of Apple's likely entry into the auto market. We've got a 10-year Treasury now yielding 1.67%, so we're down more than 6 basis points in yield. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, Doug, thank you so much. Appreciate the update. We mentioned about how opening day, Major League Baseball being rolled back, certainly here in New York with the Mets because of COVID-19 protocols. New York City's health commissioner warning residents to take precautions during the Easter and Passover holidays as the city's COVID-19 cases remain stubbornly high and more contagious variants surpass 70% of them. And then we talked about Pfizer and BioNTech's COVID-19 vaccine remaining more than 91% effective after 6 months, according to some data from a final stage trial released today. We've got a perfect voice to talk about it. Dr. Amish Adalja. He is an infectious disease physician, senior scholar at Johns Hopkins Center for Health Security at the Bloomberg School of Public Health, of course, supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Dr. Adalja on the phone from Pittsburgh. Dr. Adalja, nice to have you here with Tim and myself. So much to talk about, but let's start with Pfizer and finding that 6 months out, it still seems to be working and keeping individuals safe when it comes to COVID-19. This feels pretty big.
Yeah, I think it is. It's good news, and I think it's something that we all expected to see because most vaccines do have durability that lasts, a year or even more than a year. If you think about some vaccines like our tetanus vaccines, it's just that when you're doing all of this in the midst of a pandemic, you don't have time to do the natural history studies ahead of time to know when immunity may wane, when you might need a booster. So what's going on now are these natural history studies, and I suspect that 9 months we'll hear that it works well at 9 months, and we'll hear that it works well at 12 months. And I think that's to be expected, and it makes it it gives people a lot more certainty, especially as guidance starts to change for what vaccinated people can do.
So, Dr. Adalja, does that change the way you're thinking about a potential booster, that people who get this vaccine might need a booster at some point in the future?
Yes, I think it's too early to say when we might need a booster. And remember, we have different boosters for different vaccines. So a tetanus shot, you get your booster every 10 years. And there are other vaccines where you might get a booster in a shorter period of time. So, for example, you get one dose of the measles, mumps, rubella vaccine around 12 to 15 months, and you get another one around 5 years of age, and then you're done. So it's different, and it's really based on doing those studies, watching antibodies, watching T cells, looking to see do people get reinfected, and then you make a decision on when a booster might be needed. But I think we're likely not going to need a booster for at least a year and probably more than that. There's a separate issue about variants and updating the vaccine, which is a different issue that sometimes gets conflated with the whole booster issue. But I think it's too early to say. Hopefully it won't be something that's an annual thing. Maybe it's biannual, maybe every 3 years, every 2 years, we'll see.
Well, the Pfizer-BioNTech vaccine is one of 2 mRNA vaccines that has emergency use authorization here in the United States. The other one comes from Moderna. It does feel like we're getting more data from Pfizer at this point. Are you seeing Moderna data out there, or should we think about this being a similar result that we'd see from Moderna? I mean, can we think that way?
I do think you can largely extrapolate what's happening with the Pfizer vaccine to the Moderna vaccine because they are very similar. They're identical technologies with very similar ingredients. So most things are going to apply to both of them. But obviously we want to see the Moderna data as well because these are 2 separate products. And there'll be two separate recommendations that could result if there are any discrepancies. But I don't expect to have any kind of surprises with the Moderna data after we've seen the Pfizer data.
Dr. Adalja, for someone like me who watches financial markets and economic cycles and have for many years, there are ups and downs and there are cycles that are shorter, longer. When you look at the virus and COVID-19 cycle, where do you think we are?
I think we're in an interesting situation. So we're basically in a race between vaccines and this virus. And we've done a very good job at getting vaccine into high-risk individuals, nursing home residents, high-risk community dwelling people. And that's sort of changed the way we have to think about this virus, that we still have a large proportion of the population that's not vaccinated, but we have removed the ability of the virus to really compromise hospitals because of the way we rolled out our vaccine. So if you're vaccinated now, you're unlikely to be hospitalized, and we gave the vaccine to those people who were most likely to be hospitalized. So what I see is a decoupling of cases from hospital capacity concerns, and I think that's going to take some time to getting used to. And I think people see these cases surging, and they expect to see us get back in the same predicament we were in the winter. But that's not going to happen because of where the vaccine went. And that's where we are. Now the goal is really just to get more vaccine into those lower priority groups so that we see some decrease in spread, but we're not going to get to COVID zero. We're going to kind of get to some spot where this is not a public health emergency anymore, where it's a much more manageable respiratory disease. And I don't know where that spot is, but when hospitals are not in crisis, I, for one, don't have the same worry as I would looking at this number of cases.
Just got like 30 seconds here, and then we're going to take a break and come back and talk some more. So we're never going to get to COVID zero?
No, it's very difficult to eradicate a disease. There's only ever been one disease eradicated from the planet, smallpox. And COVID-19, or SARS-CoV-2, is an efficiently spreading respiratory virus with an unknown animal host that's already spread into other animals like minks and cats. This isn't something that goes away. It's going to become an endemic respiratory virus, one that we deal with every year, but one that never has the ability to threaten us the way it can now because of the vaccine.
All right, listen, sit tight for a second. We just got to do a little bit of world and national news, but we'll come back to Dr. Amish Adalja, infectious disease physician, senior scholar at Johns Hopkins Center for Health Security at the Bloomberg School of Public Health, of course, supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. So smart. Like, I'm taking away and like, okay, this is kind of where we are.
Yeah, we're lucky at Bloomberg Quick Take because we get to talk to Dr. Adalja every week.
You are lucky.
I know, I'm not bragging, but kind of am a little bit. Bloomberg.com/QT. Check it out.
A little flex there.
Yeah, a little bit.
All right, stick around, everyone. We'll continue talking about the virus and vaccine. You are listening to Bloomberg Business Week. Carol Massar, Tim Stanovic, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So coming up in a little bit, we're going to check in on a Business Week story by our own Sarah Fryer. It's all about big time.
You know, and it seems like they don't have to actually work that hard in order to spread this misinformation, but it's having some serious effects, and we have some data to back it up. Look forward to talking to Dr. Amish Adalja, a senior scholar and infectious disease physician, about that in just a few minutes.
We'll get back to our conversation. First up, though, let's get back to Doug Krisner with a check on that trading day. Hey, Doug.
Hey, Carol. One of the big stories today is in the oil market. WTI crude oil right now, more than 3.5% higher. We're trading 61.25. This comes after OPEC Plus agreed to increase production gradually from the period May through July. It seems to be in response to both internal and external pressure to supply a little bit more crude to the market. And perhaps it's also an endorsement of how strong the global recovery seems to be. Dow Industrial Average right now higher by 0.5%. Oh, by the way, that strength in energy leading the S&P above $4,000 for the first time. We're at a record level right now at 4,013. The gain here is something a little greater than 1%. Information technology also showing a great deal of strength today, and that's helping to lift the NASDAQ composite to a gain of about 1.7%. In the bond market, meantime, big move lower in long-term interest rates. 10-year yield now down by more than 6 basis points to 1.67%. It's an equity market holiday tomorrow, given Good Friday. We will get the government's report on March employment, and the bond market will trade. We'll have special coverage of the employment report for you here on Bloomberg Radio tomorrow, 8:30 a.m. Wall Street time. I'm Doug Krisner. That's your Bloomberg Business Flash.
Thank you, Doug Krisner. Let's get right back to Dr. Amish Adalja, senior scholar and infectious disease physician at the Center for Health Security at the Johns Hopkins Bloomberg School of Public Health. The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Dr. Adalja, we were talking, and we'll be talking later, to our colleague Sarah Fryer, who, along with our other colleague Sarah Kopit, has a new Business Week story all about anti-vaxxers and how Facebook is really allowing that information to flourish on the platform. There's this fascinating quote in here from Karen Kornblue, director of the think tank at the German Marshall Fund of the United States Digital Innovation and Democracy Initiative. She says, quote, "The folks who are supporting the science have to get better at telling the story." And that's in response to the way that the scientists have been responding to anti-vaxxers and the misinformation out there. What's the best way for doctors to actually get the message out about the safety around this vaccine?
I think it's to really talk to each person, each patient that's in front of you, and see exactly what their safety concerns are, and then provide them with that data. I think one of the benefits of Operation Warp Speed and all these vaccine trials is that we have so much data available, so you can basically address any person's safety concern. All of this data is freely available, and there are a lot of resources for doctors to be able to talk to their patients. But I also think, even when you're talking to the public, when you're in the press, it's really important just to stress that when you look at the safety data, it's really remarkable how safe this is. And it's not just the clinical trials, it's what's going on in the real world with the hundreds of millions of doses that have been distributed around the world in the basic absence of any major safety signal that's concerning. And I think that's all you can do, is really be as proactive about this and try and address concerns as best as you can, and not be in a reactionary stance where you're waiting for the anti-vaccine movement to come up with the latest conspiracy theory and then you're stuck rebutting it. I think if we present a positive case for this vaccine, the data is the best salesperson for it.
But having, medical people in my family, like every once in a while we're having a conversation and they get into medical speak and it's like, I'm sorry, I'm not stupid, but I don't understand what you're saying. And I think the messaging can sometimes be on a different plane that doesn't reach people. So like you've got this incredible audience right now, and I know you often do on Bloomberg and on Quick Take. Like what's the thing that you think you can say about the vaccines that are out there to kind of give confidence to people who maybe are holding off on getting the vaccine because they're scared?
What I would say is that I've been taking care of COVID-19 patients since the beginning of this pandemic, and I can see the benefit of this vaccine with my eyes. when I walked through the hospital, I worked at the hospital on Monday and Tuesday. I could walk around and I could see that it was a whole different place than it was just back in December when we were inundated with COVID-19. And what changed? The cases are still high. It's actually the fact that our vulnerable populations got vaccinated, and that vaccine has removed the ability of the virus to cause severe disease and death. I can also say that I have not seen any person present to the hospital with any kind of side effect or concern that that landed them in the hospital from the vaccine. I've poured over the data. I've had to answer so many questions about so many different side effects that people may or may not have had, or anecdotes, and nothing has really panned out. And I think it's extraordinary how safe these vaccines are. And I think that
even though we don't have long-term data,
yes, even though we don't have long-term data, I think it's important to remember that anytime a vaccine is approved, we still continue to study the vaccine after approval. They do what are called phase 4 post-marketing studies. They're still doing those studies for things like the HPV vaccine Gardasil. That's very normal. And the thing is, we're in the middle of a pandemic where over 500,000 people died. I don't think that there was any option of waiting 6 years down the road to say, let's have 6 years of safety data before we release this vaccine. But then there would be people say, well, we need 7-year safety data, or we need 8-year safety data.
Agreed, and I'm just playing devil's advocate.
You already got.
I've already gotten one, and I'm gladly waiting for that second one.
And I'm set to get it this weekend, so I'm pretty excited about it. Dr. Adalja, we do still see, despite everything that you're saying, despite what the scientists and doctors are saying, we do still see hesitancy among some Americans. You mentioned herd immunity and that we need to get to herd immunity. What happens, though, if we don't get to herd immunity through the vaccine?
Well, I think if we don't get to herd immunity through the vaccine, you will still have a higher level of cases than anybody wants, probably in the tens of thousands range for some time, until the population reaches herd immunity with the combination of the vaccine and natural immunity. To me, herd immunity is an important milestone, but I've always been very focused on hospital capacity, like I said before. So if we can get our vulnerable populations all vaccinated, and this isn't something that lands people in the hospital or kills them, it becomes much more manageable, even if we don't hit herd immunity through the vaccine, especially if the people that are vaccine hesitant are not the highest risk individuals. I worry about the vaccine hesitancy kind of clustering in a group of people that might be at high risk for hospitalization. But I do think that the more vaccine we get into people, the more people that are accepting of this vaccine, the faster track we are on to ending the pandemic and making COVID-19 something that is more like respiratory viruses that we deal with year in and year out. So it's going to be a major challenge when we become less supply constrained and more demand constrained.
Well, so smart and so spot on in terms of the conversations I know I'm having out in public and certainly around the newsroom and elsewhere. Dr. Amish Adalja, thank you so much. Infectious disease physician, senior scholar at Johns Hopkins Center for Health Security at the Bloomberg School of Public Health, supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Great conversation.
Let's now get a check of world and national news with Nancy Lyons in D.C. Hey, Nance.
Hey, Tim. George Floyd's girlfriend has been recounting their relationship during testimony in the trial of the former police officer accused in Floyd's death. Courtney Ross cried as she told the story of how they first met and also talked about how they both had an opioid addiction.
Addiction, in my opinion, is a lifelong struggle. So it's something that we dealt with every day.
Ross says she saw slight behavioral differences in Floyd that made her suspect he was back to using. Defense attorneys are expected to use his drug use as a possible cause of his death. There is a big win for media companies at the nation's highest court. Bloomberg's Karen Chase has details.
The U.S. Supreme Court let the Federal Communications Commission ease limits on the ownership of local media outlets. The court sided with the broadcast industry and former President Donald Trump's administration in a long-running fight. The justices unanimously said a federal appeals court was wrong to block the changes. The appeals court had told the FCC to first study the potential impact on female and minority ownership in the media industry. I'm Karen Chase, Bloomberg Radio.
A new report is highly critical of U.S. Capitol Police over their handling of the January 6th attack on the Capitol. The report by the police department's Inspector General, obtained by CBS, says Capitol Police failed to act on intelligence that suggested there would be a large violent event targeting Congress. Inspector General Michael Bolton cites multiple deficiencies, including the department's failure to pass along intelligence from outside sources before the attack. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Tim Stanovic. And a story that's certainly catching all of our attention on the Bloomberg today has to do with Cathie Wood. We talked earlier about this week how she launched a new ETF. It's called the ARC Space Exploration and Innovation Fund. And we've been watching these funds in terms of how they're trading. And two, that Space Exploration and Innovation Fund, and then our flagship ARC Innovation ETF, taking in around $1 billion in a single day this week.
Yeah, it's a record breaker. Cathie Wood's flagship fund saw the biggest ever inflow on Tuesday. That, of course, is the ARC Innovation Fund. As you mentioned, Carol took in a record $717 million on Tuesday, while that new Space Exploration and Innovation Fund took about $281 million, and that was in its debut. This shows not only the interest that there is in Cathie Wood, but also, well, I would say that interest in ETFs, but also in Cathie Wood. I mean, she has absolutely made a name for herself in recent years, despite the fact that she's been at this for decades.
Right, exactly. And, you know, this newest launch seen as a key test of her appeal. I mean, let's not forget that we have all been talking a lot about Cathie Wood and ARK Invest this year, because her funds have been under some pressure. There have been some outflows. Some of the big names that she invests in and has a lot of exposure to, like Tesla, like some of the pandemic names, they have certainly been under pressure as we've seen kind of a market economic recovery. But nonetheless, I'm just looking, let's see, after one of the strongest performances of 2020, her ARC Innovation Fund, it's down roughly, I'm just looking about 2% so far this year, but I mean, it was on such a tear last year, and we're seeing it up and again about 1.5% today, and that was after about a 5% run yesterday.
Still, though, there are some bearish bets, and they've been building in the ARC Innovation Fund. Short interest climbing to 4.9% of shares outstanding. That's according to data from IHS Markit. That's close to the record that was early last month of 5.3%.
Yeah, so we'll just keep an eye on them. We certainly do. But nonetheless, she launched a new fund. There was investor interest, and new money is definitely coming in, as you can see. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
We have a rally in energy stocks today. They are tracking the price of crude oil higher. WTI right now in the extended session, 61.25. So today's gain is about 3.5%. This is after OPEC Plus agreed to increase production gradually from the period May through July. And the gains in energy leading the S&P 500 above 4,000 for the first time. We were at 4,012 and change. The gain is greater than 1%. Also strength in information technology shares, and that is helping to lift the NASDAQ composite higher by about 1.6% right now. We're seeing shares in AMC Entertainment down more than 7%. The company's CEO, Adam Aron, telling CNBC, AMC will seek approval from shareholders to potentially issue more stock in the future, perhaps as many as 500 million new shares. This would help provide some kind of financial cushion while AMC works to draw customers back to movie theaters. Dow Industrial Average right now ahead 0.5%, and in the bond market, 10-year Treasury down more than 6 basis points in yield, right now at 1.67%. I'm Doug Prisner. That's your Bloomberg Business Flash.
All right, Dougie, thank you so much. All right, so makes you wonder, Tim, if anything is changing when it comes to social media. This next story kind of plays into that. It's about how Facebook is letting anti-vaxxers scare women from COVID shots. It's real, and I got to say, I know this firsthand based on the conversations I've been having. There's a lot of women, especially those who maybe haven't had children or are waiting to have their kids, and they're worried about getting vaccines.
Look, this is something that's new to everybody right now, and the science is playing out in real time, as we talk about all the time. Joel Weber is editor at Bloomberg Business Week, joining us on the remote from Brooklyn on the Access line. Sarah Fryer is technology reporter at Bloomberg News, and she's the author of No Filter, the Inside Story of Instagram, joining us now on the phone from San Francisco. Joel, this is a very concerning piece from Sarah Fryer and Sarah Kopit, because Facebook, it seems, would have the power to stop the spread of this type of misinformation, and they've indeed changed the way that they're thinking about it, but it's still flourishing on the platform.
Well, and it just speaks to a kind of the bigger Facebook story that Sarah has been all over for years now about just misinformation on the platform. And the main metric of success for Facebook is engagement. And even when things are outright lies, if people engage with them, it tends to be something that Facebook struggles to figure out how to police and moderate. And they've kind of said one thing and have necessarily not always done that in this particular instance. And I do think it's a really fascinating sort of case study, because here we are in the middle of the pandemic. People are getting shots and or considering getting vaccinated at a rapid clip now, and yet we've actually seen, and what Sarah's reporting shows, is that women on social media, and particularly on Facebook, have been basically targeted by anti-vaxxers, and that has become really a devastating impact. So Sarah, talk to us a little bit more about what you found and why it's so troubling.
Well, this anti-vax movement has been brewing for years for other kinds of vaccines. And with the pandemic, it's different because the first people eligible for these COVID shots are adults. So the normal rhetoric that they target young mothers with, telling them not to get their kids vaccinated, they're targeting that same group but saying that the vaccine is going to cause fertility issues. You don't know what the adverse side effects are going to be, and it's simply not true. The problem is on Facebook, and we've talked about this over and over on this show as well, the stuff that spreads is that which sparks emotion. It's that which causes surprise and commentary. And although Facebook has done all these things like banning the worst offenders and trying to put up good vaccine information, they're up against their own system, their own design that rewards that kind of behavior on their apps. And on Instagram, it's very pervasive too. And I would even say a little bit worse. The lead character of our story is this woman, Khalees Williams, who was always a little skeptical, became more skeptical, I should say, of the medical establishment after going through cancer treatment. And when she joined Instagram, she got really into alternative health and natural wellness. And through that, went down the rabbit hole into learning this false information about how vaccines could cause adverse side effects that simply wasn't based in reality. And on Instagram, you have the effect of the people that are saying that are simultaneously trying to sell alternatives, supplements, detox plans, workouts, whatever they can do is an alternative to what the government is selling via vaccine. So I really think that it's not a reliable source of good health information.
Well, Sarah, I'm glad you brought that up because that's something I wanted to talk more about, and that was one of my takeaways, that there is actually this anti-vaxxer industrial complex out there that stands to financially benefit from people not believing the science.
Right. I think that again, it's preying on the fear. And on Instagram, people have built their profiles, the influencers who are in wellness have built their profiles around giving you this idyllic path for your life, saying, if you just do my juice cleanse or do my workouts, trust me, I know what to do, and you can look like me and you can have a life like me. And those personal stories, again, just like on Facebook and Facebook groups, personal stories resonate. People trust people who are intimate and emotional and letting them into their lives, and will buy things from those people, whether it's buy into the anecdotes they're spreading or buy what they're selling in terms of wellness retreats and supplements. So I think that it's important for people to understand that as we shift from this discussion about vaccine supply, who's eligible, when is it going to be distributed, to a discussion about vaccine demand, once more people have access to the shot, this is going to be a huge factor.
So, Sarah, who's at fault? I mean, I feel like Facebook, we learned a lot leading up to the November election about misinformation on the platform. So do you fault Facebook for not policing it more, or do people fault Facebook now, for policing it not more? Or what about the science community and medical community for coming out with smarter messaging?
Well, the medical community, it's difficult because inherently doctors are not going to tell you things in absolutes. There's a lot of nuance there. There's a lot of technical background that needs to be told. And on Facebook, they have done a lot to try to improve their reaction to the problems, but they haven't done anything to solve. They're solving the symptom and not the disease. The symptoms being the information that spreads, the people that have gotten famous, the worst is the worst. The disease being just the very structure of the app, how it actually works. The way things are personalized. The woman I was speaking of earlier said, the great thing about Instagram is once she finds some people who are, in the world she wants to sell her essential oils to, Instagram just serves up more people like those people. It's all about the personalization. It's all about bringing people deeper into the communities that they want to interact with online, because like Joel said, it's all about engagement, and that is the fundamental problem.
I love that aspect of it where you got into groups and the meaningful conversations and how that just provided so much more momentum to these conversations, inaccurate ones and others. Sarah, it's a great read. It is so full of information, smart information, and understanding how this all works. So I highly recommend that everybody check it out. It's going to be featured, by the way, in the upcoming issue of Bloomberg Businessweek magazine. You can read it now, though, on the Bloomberg terminal and also at bloomberg.com/businessweek. Sarah Fryer, thank you. Technology reporter at Bloomberg News, author of No Filter, The Inside Story of Instagram. Great weekend reading. I'm just going to point that out. With us from San Francisco, Joel Weber, editor of Bloomberg Businessweek. Coming up next, everyone, don't forget, you've got Bay State Business. If you're in New York, D.C., and San Francisco, and on YouTube, Tim and I, Business Week, we continue.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
3 p.m. on Wall Street from Bloomberg World Headquarters in New York. I'm Doug Krisner. It is the first day of the second quarter, and we have the S&P 500 at all-time highs. Right now, 4,013. We're above $4,000 for the first time today. Energy out in front of this advance. WTI crude oil right now higher by more than 3.5%, and that is lifting the S&P Energy Group to a gain of nearly 2.3% right now. This after OPEC Plus agreed to increase production gradually from May through July. Information tech also showing a lot of strength today. The information tech group within the S&P 500 is up by about 1.9%. Those gains also lifting the NASDAQ composite higher by about 1.6%. Seeing actively traded, Micron Technology. The stock is up nearly 5% right now. It was after the bell yesterday, Micron gave a bullish forecast for both sales and earnings, and analysts were especially positive on pricing trends for DRAM chips, along with the improvement in demand that we are seeing for enterprise customers. Also want to point out that Micron and Western Digital are reportedly each exploring a potential deal for Japan's Kioxia Holdings. Apple today upgraded to buy from neutral over at UBS. Apple shares most heavily traded. Stock is up about 0.5% right now. UBS citing a more stable long-term demand picture for the iPhone, and at the same time, UBS citing the option value of Apple's likely entry into the auto market. Now, even though the equity market will not trade tomorrow, will be on holiday, I guess you could say, the government will report on March employment. The bond market will be open, and we will have special coverage of that data for you at 8:30 a.m. Wall Street time here on Bloomberg Radio. Right now, 10-year Treasury yielding 1.67%, so we're down a little more than 6 basis points in yield, and that has given us a weaker dollar as well. That's the Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic from Bloomberg Radio.
You are listening to Bloomberg Business Week. It is Thursday. It is the monthly jobs report eve. And back with us is an insider and an informed and insightful voice when it comes to all things Washington and politics and policy. Chris Liu is back with us. He's former Deputy Secretary of Labor under the Obama administration, worked up on Capitol Hill. He's actually worked in each of the 3 branches of the U.S. government. He was also executive director of Barack Obama's 2008 transition team, member of President Biden's transition team, and he is senior fellow at the University of Virginia Miller Center. He joins us on the phone in Charlottesville, Virginia. Chris, so nice to have you here. How are you?
I'm great. Boy, we have to shorten that introduction.
I was going to say, sorry, we've run out of time. You have to stop being, doing all these notable things. Let's talk jobs. How do you see it right now in terms of, we knew the pandemic shut us down, we lost all these jobs, we're coming back, but we're a long way from being there.
We are a long way. The consensus estimate for tomorrow is around 600 to 700,000 compared to last month, which was 379,000. I think that's about right. I think when you look at the pace of vaccinations as well as reopenings around the country, people are starting to travel more, go out to restaurants. I think things are picking up, but it's important to understand what a big hole we are in. Let's say we get, 600,000 jobs created. We'd still be down about 9 million from where we were before the pandemic, and that's still far worse than we ever were at the height of the Great Recession. So we are in a really big hole, and we're kind of slowly crawling back out. Obviously, the economic relief package, the $1.9 trillion, is important. Infrastructure is important, but we're not out of the woods yet. I mean, we could now are starting to see COVID cases rise back up in the Northeast and Midwest. Some states, I would argue, are opening too fast, and so it's kind of a race against time right now.
Can we get out of the woods, Chris, without another recovery package?
Well, it sort of depends on what you think get out of the woods means. I mean, what President Biden has talked about is Build Back Better, which is the goal is not just to get back to where we were in February of 2020, but to really try to address some of the broader economic inequalities, not only just at the individual level, but obviously the continued underinvestment in infrastructure over the years, and that's across all administrations. So, look, I think we can get employment back to where it was eventually, but I do think the lesson we learned from the Great Recession is that unless we go big, the recovery takes much longer. People will suffer far longer, and I think that's the underlying theory about why the president and Democrats in Congress feel like infrastructure needs to happen.
That's a great point. Like, listen, this is not the same crisis as the financial crisis, right, Chris? But we did commit a lot of money right after the financial crisis to bring things back. But let's not forget how kind of low and slow it was going in terms of that recovery. Here we are, and we have an opportunity to kind of really make a difference for the current economy, but even more importantly, for the longer-term growth of the U.S. economy.
Exactly. And, I think about the Recovery Act that was passed in 2009 when I worked for President Obama. That seemed really big at the time. And now you consider that just over the past year plus, we've done about 5 to 6 trillion of economic relief just to get us out of COVID, and then potentially now another 2 trillion in this first round of infrastructure. So we're now looking at, 8-9 times bigger than where we were in 2009. And I think history has taught us that if we really want to get the economy back up and running, but more importantly, create jobs, bring manufacturing back, and stay competitive with China, we need to do a lot more. And that's why there is so much in this infrastructure package and so many things, frankly, that, again, if we could divorce politics from this, and that's obviously impossible to do, you'd find a lot of bipartisan support for not just roads and bridges, but broadband and school construction. These are things that people have been talking about in Washington for years.
We can't divorce politics from this, though, and that's the issue, that's right? Everything is political. Given that the Biden administration wasn't able to get a single Republican vote for the $1.9 trillion relief package, how does the administration push through a $2.25 trillion infrastructure plan?
I think they're going to first see if they can find some support and some common ground. And the White House Chief of Staff, Ron Klain, did a talk today where, he didn't immediately say we're going to go down and do the budget reconciliation route, which takes 51 votes. But they're going to try to find bipartisan support. And that may be not in Washington, but they're going to try to at least make the case to the American people the way they did with the economic relief package, why this is so important. And it's one of the reasons why that bill polls so well. But I think ultimately, if you were a betting person, you'd say it's unlikely Republicans would support this in light of the tax increases that are going to be part of this, which means you're going to have to go back and do that budget reconciliation process again.
Chris, just got about a minute, and then we'll take a break and come back some more. But I do wonder, how do you, from your experience of working in the Obama administration, but also in Congress, like how does public sentiment play into this? I mean, I think, Americans get it when they get $1,400 or whatever it is back in their pocket, right? But do they kind of relate with a big infrastructure spending bill that might give them better internet or cleaner water? Do we relate well? Do we think about that when we go to the polls? And again, just got about 50 seconds here.
And it's hard because the evidence will show that it didn't translate to political support in 2010. I think what will be important is how tangible some of these things are. If people really do see their roads and bridges improve, really do see investments that affect their life immediately versus much, much further down the road.
The tough part is this stuff doesn't happen immediately, though. These are infrastructure projects we're talking about.
No, but right, Chris? It's a while.
Yeah, and I'm not sure, like, if we say we're going to modernize our electrical grid, anybody can ever notice that until we have a situation like
Texas.
We had in Texas.
Yeah.
Exactly.
Yeah.
Well, but I would think that after this past year and problems with supply chain, that we would be thinking more about what we need to do domestically to kind of put ourselves in a better position. We'll continue with this because I am curious about how he sees it versus U.S. versus China. Chris Liu, Senior Fellow over at University of Virginia Miller Center, so much more, former Deputy Secretary of Labor under President Obama. He's going to come back in just a moment.
Let's get a check of world and national news right now. Nancy Lyons is in Washington, D.C. Hey, Nance.
Hey, Tim. Well, you've been talking about it. Now that President Biden has unveiled his $2.2 trillion infrastructure plan, it's time for Congress to take it up. Bloomberg's chief Washington correspondent Kevin Cirilli says it could take a few months for the debate to begin.
come this summer is when Speaker of the House Nancy Pelosi is going to move the progressive infrastructure package through the House of Representatives, Democratic controlled, of course, ahead of the August recess. Then you've got a month-long recess, and then in the fall is when, based upon my reporting, I expect for a lot of these conversations in the upper chamber and the negotiations to begin.
Again, Kevin Cirilli in Washington. President Biden has directed 5 of his cabinet members to help advance the plan. Republicans, though, are pushing back to raise because they do not like Biden's proposal to raise corporate taxes to pay for it. Authorities are revealing more about last night's shooting at a business park in Orange, California, in which 4 people were killed, another was wounded. Police Lieutenant Jennifer Amat says they're still working to notify the victims' families.
It appears all of the adults were connected either by business or a personal relationship, and this was not a random act of violence.
Amat says one of those who died was a 9-year-old boy. The suspect, 44-year-old Amenadab Gaxiola Gonzalez, was wounded, and he is hospitalized. COVID-19 is forcing the postponement of the opening day game between the New York Mets and the Washington Nationals. MLB.com is reporting that the decision was made after a Nationals player tested positive yesterday. 4 players and a staff members are in quarantine due to contact tracing. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. All right, this is a pretty interesting story. Amazon, its tentacles just getting wider, longer, everywhere.
I mean,
potentially. What?
I don't even know where to begin, because I was going to say, it's like Amazon has to find its next $1 trillion, right?
Yeah.
In market cap. And it's looking everywhere.
Going after the home, I think, is brilliant.
It's already in the home.
Yeah, it is already. But think about if you could actually go to places like I think about TJ Maxx and their home goods. I mean, they just, it's constantly busy. It's where everybody goes. So here's where we're coming from, everybody. Matt Day of Bloomberg News has a story. Amazon.com exploring opening discount retail stores, selling a mix of home goods and electronics, a potentially significant expansion of the company's growing portfolio of brick and mortar locations.
Okay, so the outlets would carry unsold inventory that's sitting in Amazon's warehouses at steep discounts. That's according to 2 people familiar with the plans. The company has considered opening permanent stores as well as pop-up locations in malls or even parking lots. These people said the plans were preliminary and under discussion last year, but the pandemic and then the new fresh grocery chain forced many employees to focus on day-to-day operations instead.
And keep in mind, it wouldn't be the first thing. Amazon Go, it's a cashier-less convenience store. It uses cameras and other sensors to track what shoppers take off the shelf. That opened to the public in 2018. So did Amazon 4-Star, that's an electronics, home goods, and Toys Bazaar that sells a potpourri of highly rated and best-selling items. And then Amazon Fresh began opening stores last year and has been adding new locations at a steady clip. So it's interesting that brick and mortar presence is growing.
Have you been to an Amazon Go store with the cameras?
You?
I haven't been to a Go, but I've
There's
been to
one
4-Star.
in the city, I think.
So,
yeah,
there is an Amazon Go in the city, I believe. Yeah. But I have been to Amazon 4-Star, and it's like reviews of, I don't know what it's like now. I haven't been there since the pandemic, but it has stuff that's been reviewed at 4 stars on Amazon. And it's like there's no rhyme or reason except for the ratings as to the products. It's really interesting.
That's like a fun concept.
Yeah.
So it's top-rated goods.
Exactly.
Exactly. Listen, what's interesting, though, is Amazon, which has, it owns the e-commerce world in a big way, but increasingly thinking about brick and mortar to get to all of us. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
It's the last trading day of the week, given Good Friday, and we're looking at some positivity in risk assets right now with about 43 minutes to go into today's session. Let's get to the Bloomberg Macro Squawk Desk and get a closer look at some of today's price action. Bailey Lipschultz is with us. Bailey.
Good afternoon, Doug. As you said, stocks are trading higher with the S&P climbing past the 4,000 level for the first time ever. Dow was up 130 points, S&P higher by 40, while the Nasdaq has added 200 points. U.S. 10-year yield is at 1.68%, and small caps are higher by 15 points. 9 of the 11 main S&P sectors are trading higher, led by gains in energy, tech, and communications, while utilities and healthcare are trading lower. Nasdaq Biotechs climbed 25 points, transports rose 105, semis are also up 105 points, while the VIX is lower by 8%. Leaders in the Dow, Salesforce, Microsoft, and Disney, while Boeing, United Health, and J&J are the worst performers. After earnings, CarMax fell as quarterly comp sales missed estimates, and automakers including GM and Ford had higher first quarter sales than last year. Regarding deals, Coinbase is said to plan its direct listing in 2 weeks, and airliner Frontier Group churned in its trading debut after an IPO. Wrapping things up, Emergent Bio fell the most since October after an issue making a batch of the J&J COVID vaccine. Live from the First Word Breaking News Desk, I'm Bailey Lipschultz. Doug?
All right, Bailey, thank you. Big move lower in long-term interest rates. 10-year Treasury giving back a little bit, let's call it 6 basis points to 1.68%. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, Doug, thank you so much. I want to get right back to our guest. Chris Liu, still with us, former Deputy Secretary of Labor under the Obama administration. He is now Senior Fellow at the University of Virginia Miller Center. Hey, Chris, something I wanted to ask you, and I feel like this plays into President Biden's infrastructure plan and spending, is that when you look at a nation like China...
Ladies and gentlemen, I'm going to place order to buy British pound. So if you're looking to buy British pound, 138.272, here is the order I'm going to place to buy British pound. So as you can see, one position, I still have short position on British pound. I want to open another position at 138.272. Okay, this is quite important. I am not trying to close position, I'm trying to open another position. If you don't know how to do it or why I done this, all you have to do is just get the strategy and to find out for yourself how and why I did this and how can I do this, how anybody could do this. Okay, so I am waiting until this order will be filled, and I'll speak to you later, guys.
Can start innovating again and building the kinds of products that should be that we've done, for all of the 20th century. And then the roads and bridges really is a kind of a critical part. If we want to start to manufacture more things in the United States, we have to be able to transport that stuff efficiently around the country. And so there's not just one thing, it's a multiple things. And I think that's what this bill tries to do, as well as importantly making those investments into clean energy like solar and wind, which are areas that we are really in direct competition with China right now.
Chris, the fact sheet from the White House that came out yesterday about the American Jobs Plan, it mentions China 5 times. Is this the right way to position it to try to get some bipartisan support for the plan, positioning China as one of the reasons as to why Republicans should sign on along with Democrats?
Exactly, and I do think that is oddly one of the areas of true bipartisanship is trying to kind of bash China, go head-to-head with China, however you want to characterize it. So I think that's obviously very deliberate. On the other hand, as we talked about in the previous segment, the fact that a lot of these investments will be paid for by rolling back the Trump tax cuts, I think will be so problematic for Republicans that even if there's a lot of things in here that would help make us more competitive, it won't overcome their other objections.
So is there a better way to position paying for this? Because it's anathema to Republicans, raising corporate taxes?
This is the problem. I mean, it became kind of
okay, guys. Position open on British pound. Long position, as you can see, just right here. So all of you who decided to trade this pair, well done. You're into this trade. Stay with me, and I'll let you know when and how long it will take, and when will be the right time to sell this position. Okay? Well done, guys. I'll speak to you later.
Which I think was an improvement from where it had been, which is D+ for years and years and years. And so there's been a constant underinvestment in Democratic and Republican administrations. And inevitably the reason is because nobody wants to pay for it. And I would argue, and I think most economists would tell you, that we either pay for this on the front end or we're going to pay for this on the back end in terms of a workforce that's not well trained, roads and bridges that can't transport goods, less innovation in our country.
Hey, we've just got about a minute or so left here, Chris. One thing that we wanted to ask you, it just feels like the last year we have just seen segments of our population targeted, whether it's Black Americans, and most recently we're seeing Asian Americans targeted. And I'm just curious what your thoughts are. Are you nervous as you move around society because of what we've seen as of late, the hate crimes that we're seeing against Asians in this country?
It's incredibly troubling, and it's consistent with the rather grim history of Asians in America, where we have been treated as outsiders, people with dual loyalties, people who can't be trusted, really going all the way back to Chinese railroad workers and Japanese American internment. Obviously, the political rhetoric around COVID over the past year has really exacerbated the problem. And frankly, the issue that we just mentioned, China, is going to continue to weigh on this. I would like to think that we can have a reasoned discussion about how the United States should be more competitive against China and actually confront them on intellectual property and their military aggression without the flip side of it being more attacks and ostracism of Chinese Americans and more broadly Asian Americans. But unfortunately, the history in our country is that, that has not been the case.
Yeah, history often trips us up on this in an unfair way and in a wrong way. Chris, thank you, though, for weighing in on that and so much more. Chris Liu, Senior Fellow, University of Virginia Miller Center, former Deputy Secretary of Labor under President Obama, joining us once again from Charlottesville, Virginia. Chris, stay safe. This is Bloomberg Business Week, and this is Bloomberg Radio.
job there, Carol.
There's a C class too. We didn't know about that one.
I didn't know about the C class. You learn something every day here on
Isn't a
Bloomberg
C-class a
Business Week,
car?
don't you? I'm sorry.
Isn't a C class a car?
Yeah, it is. I guess if you're in your income bracket, it is.
Yeah, right. All right, Doug, take it away.
We have about 28 minutes until the 4 p.m. closing bell for the equity market. S&P 500 right now at a record high, 4,010. So we're above $4,000 for the first time. And you have to credit the rally that we're seeing in energy shares. The S&P 500 energy group is up by more than 2.3%. And this is mirroring a rally that we're seeing in the crude oil market. WTI now in the extended electronic session, 61.30. So today's gain is something greater than 3.5%. This comes after OPEC Plus agreed to increase oil production gradually from the period May through July. At the margins, we're hearing a little bit of the conversation around infrastructure stimulus. Early innings here, obviously, but today we heard from Senate Minority Leader McConnell saying the plan will get no Republican support. So it's the last trading day of the week, given the Good Friday observance tomorrow, but the bond market will trade given the employment report. We'll have that released tomorrow at 8:30 a.m. Wall Street time. 10-year Treasury right now yielding 1.67%. I'm Doug Krisner, and that is your Bloomberg Business Flash.
Thank you, Doug Krisner. This is Bloomberg.
Every time that girl walks by, break my heart in three. Break my heart.
Okay, what decade?
This decade.
Huh. It's a good one. I have no idea.
This would be a moment of discovery for you.
Oh, this is, I mean, look, I know why you're saying break my heart in three. I know why you said discovery, okay? Then it all makes sense.
Okay.
Who is it
Do
then?
you know the band?
No. But
I
I
didn't think so.
But I know the chart.
It's the Weaklings.
The Weaklings.
It's a Jersey band, and by the way, that is spelled W-E-E-K-L-I-N-G-S. You know, a little bit of a takeoff.
This is a moment of discovery for me.
That's kind of cute.
Kind of like what the Beatles did, right? When P-E-E became B-E-A. And it's fitting because the band specializes in Beatles covers.
They have a definite Beatles sound. I had no idea. That's really cool.
And that is the title track, fittingly enough, of their third album.
That is really cool. I had no idea. Have you seen them in concert?
Yes.
Oh, did you? Were they good?
Quite good.
Oh, very cool.
Which makes sense because the guy who was the lead singer there, the bass player Glenn Burtnick, he was a solo artist for a while. He played with Styx for a number of years. I mean, so we're not talking, garden variety kids in their 20s.
Right. So wait, do they do covers of Beatles or their own music? They do, and then they do their own stuff that sounds like Beatle music?
That's right.
Very cool. All right, so now, thank you.
Now that you've had the discovery of the Weaklings, let's turn to Discovery, the cable channel owner.
Nice.
Yes, I mean, Tim already set up the discussion, but, it's interesting because there are two classes of Discovery shares in the S&P 500. One of 5 companies that has that distinction. You're talking Class A, which carries 1 vote per share, Class C that has none. So there's voting and non-voting stock. So turns out, there are fewer voting shares than non-voting shares, so, it makes sense that they would carry a premium. And in fact, the chart shows you that by historical standards, the premium is pretty high and has been for the past several months. When you look back to August 2014, when Discovery became a dual-class company within the S&P 500. So you've got that going on. And then you have what happened yesterday with the Class B shares that carry 10 votes each, so they're super voting stock. John Malone, the cable billionaire, as we discussed yesterday, owns 94% of them, so there are only about 320,000 available to trade. So there's a certain scarcity value you can put on that particular class. But yesterday, out of nowhere, the shares surged 83%, and that through the relationship between Class B and the other two way out of whack by historical standards. And so what the chart does...
You okay there?
Yeah, I'm fine. Pardon me, on the bottom half of the panel is it compares Class B to Class A.
I get choked up. I get choked up too when I'm talking about different classes of stock. I'm just going to tell you. Yeah.
Thank you. Thank you for trying to save me from myself. In any case, I mean, we're talking a premium that was more than 12 times the historical average when you compare Class B with Class A. I mean, it's just nuts how things got so imbalanced.
Crazy. So wait, Tim, Tim had a really smart question yesterday because you were like, so what is it? Is John Malone selling his Class C shares?
Do we know who was responsible for why those shares were surging yesterday? Do we know if Malone was selling any of his because he has such a high concentration? What do we know about it?
We don't know a whole heck of a lot, except our colleagues did some reporting and basically found out there was someone who told them that there may have been sort of an arbitrage play involved, which makes sense because, I mean, that's why these premiums matter, because they fluctuate and there are people who will buy one class of stock and sell another, based on an assumption of how the premium will change over time. So there was a trader we talked to at Bright Trading, his name is Dennis Dick, who basically brought up the idea of an arb squeeze. So sort of like what we saw with GameStop when they were trying to, get the short sellers, the ones who would borrow the shares and bet against the company, that the same thing might have been happening with arbitrage when it comes to the Discovery share classes. In any case, let me remind everyone that if you haven't seen this chart already, send me an email. I'll get it to you along with the explanation that goes with it. And all that I do going forward, the email address, dwilson@bloomberg.net. That's dwilson@bloomberg.net.
Hey, Dave, real quick, because we don't have too much time left. Do different classes of stock shares, different classes of stocks, shares of different classes of stocks, rather, do they usually trade? They usually trade pretty much in tandem, right?
It depends. I mean, I remember looking back historically at those 5 companies. The others, by the way, you've got Fox, you've got News Corp, you've got Under Armour, and of course, Google's owner, Alphabet. And, you look at the track record, there are some that trade pretty much in line with each other. There are some where you find one with a relatively consistent premium versus the other. That's been the case with Discovery, but like I said, lately things have gotten really out of whack.
Yeah. Well, like I said yesterday, John Malone, when he does things, the structure of things is always fascinating and often complicated. All right, let's get a check on world and national news. Over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. Today, President Biden, during his first cabinet meeting, announced he's asked 5 cabinet members to take an extra leadership role in promoting his American Jobs Plan.
Working with my team here in the White House, these cabinet members will represent me in dealing with Congress, engage the public in selling the plan, and help work out the details as we refine it and move forward.
The cabinet members he selected: Transportation Secretary Pete Buttigieg, HUD Secretary Marcia Fudge, Energy Secretary Jennifer Granholm, Labor Secretary Marty Walsh, and Commerce Secretary Gina Raimondo. Well, despite warnings about rising numbers of COVID-19 cases, nearly 1.5 million passengers are boarding airplanes in this country every day.
Americans are making reservations for their postponed vacation travel. The chief executive of Frontier Airlines, Barry Biffle, commented in a Bloomberg interview.
You think about the vaccine, it's just unlocking all this demand. People have got plenty of money, $3.9 trillion in people's pockets, and that's before the $1,400 with the latest stimulus. So you got huge amount of demand to get out of your house and get going. So I just think it's never been a better time to be in the airline business.
International air travel remains depressed, though Europeans are booking flights to Mediterranean resorts. In Washington, Irv Chapman, Bloomberg Radio.
Well, it's opening day for Major League Baseball, although 2 teams will have to wait. The Mets and the Nationals had to postpone their matchup due to COVID-19 issues within the Nationals organization. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. This story is our most read story on the Bloomberg in the past 8 hours. Janet Lauren, who does incredible reporting for us here when it comes to college and university endowments and tracking what's been going on, in the past year, the impact that the pandemic has had on university life and college students and college financials. Well, this one, I know this because in my family world, we're kind of focusing on next week. Many high school seniors looking to attend the most competitive U.S. colleges, they are about to have their hearts broken after an already difficult year. Students on average applied to 9% more colleges as of March 1st compared with last year. This is because, this is the Common App, that if you're applying to college, this is what high school students use. But because of the pandemic and because so many colleges and universities said we're test optional, you didn't have to put in ACT or SAT scores, kids ended up applying to a lot more schools. And next week, you're going to hear from a lot of the top tier universities.
And as a result, a lot more students ended up applying to the top schools. So Harvard, for example, saw a 42% increase in applications.
42%.
That's
off the
crazy.
charts. Yeah.
Wow.
Yeah.
So here's it's hard. I mean, look, I remember back to when I was doing the whole college thing, and I didn't get into the place I wanted to go, and it was fine. And I ended up having a great time in college, and it all worked out. And I kind of forgot about it when I got to college, but at the time it was really hard. And I kind of want to it's okay. I know that means nothing to seniors.
It means nothing to teenagers.
It means nothing to seniors.
And
And I'm already very stressed out about having to go through this process again myself at some point for my son.
Yeah.
But yeah, I feel for these kids.
Well, and kids did apply to more schools because if they knew their test scores, well, first of all, a lot of the kids didn't get to take tests, but maybe they might have not been a school that they would have normally applied to, but because they didn't have to submit those test scores, they just kind of spread it around. So anyway, next week is a big week where you get kind of the final results from a lot of schools, and so we'll see what happens.
Fingers crossed for all the students applying.
Totally. Fingers crossed. You're listening to Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
So it's the last trading day of the week, given the market will be closed tomorrow in observance of Good Friday. Right now, it looks as though we're going to finish at record highs, at least where the S&P is concerned. We're above 4,000 for the first time ever, 4,013. The gain is something greater than 1%. Energy shares out in front of this advance. We have a rally in crude oil today after OPEC Plus agreed to increase production gradually from May through July. The S&P 500 energy group is up about 2.4%. Crude oil in and of itself in the electronic session now. So the regular session closed at 2:30 p.m. Wall Street time. Right now we are trading 61.20 with a gain of about 3.5%. Also a lot of strength in information tech shares today. Micron Technology trading up by more than 4%. It was after the bell yesterday. The chipmaker gave a bullish forecast for both sales and earnings. And Micron and Western Digital are reportedly each exploring a potential deal for Japan's Kioxia Holdings. We'll have the employment report 8:30 a.m. tomorrow, Wall Street Times special coverage here on Bloomberg Radio. In advance of that data, 10-year Treasury down nearly 7 basis points in yield. We're trading right now at 1.67%. I'm Doug Krisner. That's your Bloomberg Business Flash.
Thank you, Doug Krisner. Well, it's been a little over a year since the COVID-19 pandemic disrupted our lives. Every day at this time, we take a look at different industries or ways of life that underwent monumental change in the past 12 months. Here with today's installment of A Year Like No Other is Bloomberg's Renita Young.
The fate of many small businesses could lie in the hands of landlords. The pandemic has forced some owners to ask their landlords for flexibility. And in New York restaurateur Danny Abrams' case, he was only able to fully reopen one of his 7 restaurants, the Mermaid Inn on the Upper West Side. While some landlords have been willing to work with him,
other landlords are, you owe me the rent, and I know you got PPP, so I want the full rent, and that has not worked out well.
Abrams' business survived through 9/11, the Great Recession, and Hurricane Sandy. And now the key to survival in the future is the flexibility his landlords are willing to give. One chose to defer rent payments instead of canceling the debt, leading Abrams and his partner Cindy Smith to shut down the location.
We'd end up owing the landlord hundreds of thousands of dollars, and that's not a recipe for success.
Those are just some of the ways that restaurants like Danny's have had to pivot in a year like no other. I'm Renita Young, Bloomberg Radio.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just got about 10 minutes, a little bit under, no, just about 10 minutes left in today's trading session. Getting ready to wrap up the holiday shortened equity trading on this holiday week. Let's get to John Trainer. He is back with us, Chief Investment Officer at People's United Advisors, $9 billion in assets under management, on the phone in Bridgeport, Connecticut. This on a day where we saw the S&P 500 breaking above 4,000, and we're really seeing the bull market barrel on. John, good to have you here. 4,000, it's just a level, but it's just a reminder that stocks continue to move higher.
Thank you for having me back, and you're correct. I mean, hitting that number, the numbers are these psychological barriers, but it just shows you, the confidence that investors are gaining in the market, in the economy, and in the recovery. And, it's great to see. It's great to see, and there's a lot of momentum behind that psychology, that confidence.
Well, the confidence is there and that the reopening is happening, but how much higher can it go this year?
Well, one of the things that we're talking with clients about is it's great to see the averages moving, but what we really want to see is a broadening of the market. Last year was really, if you didn't own the big 5 tech stocks, you didn't participate. Well, we think this year is going to be the story of the other 495. So you could do well this year and not see the averages go through the roof, but you could do well if you had that broadening of the market, a broadening of the portfolio.
Listen, it's an economic recovery. I mean, whether we, right, this is what we're getting ready for, provided we don't see another, significant COVID outbreak that leads to a shutting down of the U.S. economy. But, I mean, I feel like, John, everything is pointing to a very, very strong second half. Having said that, how much of it do you think is already factored into the overall trade?
Well, you hit the nail on the head. I do think a good amount of it is factored in, but just think about the recovery that we still need to see on Main Street. I mean, the restaurants. One of the things we'll be watching for in the unemployment number tomorrow is how many people get rehired in the hospitality and leisure area. Those are the waiters and waitresses. So there's a lot of recovery that still needs to take place, and consumers, they need to get out. They need to get outside. Once they get on, get back to Main Street, I think you'll see that flow into the market. So we still think we're going to see these averages move higher.
Hey, John, where does the economic stimulus package, and now I'm not talking about the $1.9 trillion one, I'm talking about $2.25 trillion infrastructure plan that was announced yesterday. Where does that fit into this picture?
We've taken a look at a couple of economic estimates, and again, this is infrastructure spending. So this is spending that's going to be, for years to come. I mean, the planning of rebuilding bridges and all that infrastructure needs to be done. One of the things that has encouraged us about the infrastructure plan is that we were concerned that we would have this spurt with the $1.9 trillion, a spurt in growth this year, and then slow down pretty dramatically in the out years. The infrastructure package, it's not causing us to change our forecast for this year, but we're raising our 2023-24 numbers because of that package. So it's increasing our confidence in the out years.
So what's the risks here? What's the thing that we're not, beyond the Archegos or Archegos, however you say it, blow up, which didn't really impact the overall trade, but is a reminder that things can happen, without without us, those black swans, they do happen, even little black swans.
That's right, and it's really the leverage in the system. When you've got free money for as long as we've had it, and that's basically what we've had from the Fed for quite a while now. Mistakes are made. When your hurdle rate is zero, everything looks good. So I wouldn't be surprised if we don't see some more of the heavily levered investors, the hedge funds primarily, have problems going forward because there are a lot of levered bets out there, and I don't think we've seen the end of that. The leverage in the system is a concern, but the bigger issue, we haven't seen it. Investors in the bond market are basically still saying the Fed is going to do a good job and keep inflation under control. And that to us, that's the big question mark.
Our Joe Weisenthal, I don't have the note in front of me, but puts out a note every morning about kind of the 5 things you need to know every morning. And one of the things, he had a guest on recently, that when you look at the activity, and forgive me, I'm probably not going to do the best summary, but it's basically this whole idea that, back in January, everything was falling apart. We were looking at rising virus cases, looking at another wave. We didn't have all the economic recovery packages in place, and it felt like everything was coming undone. And then here we get, trillions back into the economy, and we're now talking about crazy growth numbers for the second half, and the bond market is just reflecting that and did it pretty quickly. Is that something you think about? And just got about 30 seconds, actually about 20 seconds.
Yeah, no. And what we're looking at, yes, we've seen interest rates go up, but we haven't really seen, the real rate go through the roof. And we believe the bond market, even though rates are moving up, the bond market is still saying the Fed is in control and they'll do a good job. Absolutely.
Hey, John, have a good weekend. Thanks for stopping by. John Traynor, Chief Investment Officer, People's United Advisors, on the phone in Bridgeport, Connecticut. That 10-year note right now with a yield of 1.67, 5-year note yielding 0.90, and the 2-year note with a yield of 0.16. We've got the closing bell on Wall Street that's coming your way in just about 3 minutes' time. This is Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
$4 p.m. on Wall Street. There you have it. That is the sound of the closing bell for this April Fool's Day 2021, Thursday, and it is the final trading day of the week. U.S. equity markets will be closed for the Good Friday observance. That will happen, obviously, tomorrow. So on the first day of the second quarter, we have, which is today, the S&P 500 at a record high, 4,019. The gain, nearly 1.2%, breaking above $4,000 for the first time. You really have to look at the energy complex leading the advance, and this is correlated with a rally in crude oil today. In the New York session, WTI was up nearly 4% after OPEC Plus agreed to increase production gradually from the period May through July. Also, a lot of strength in information technology today. The S&P 500 Infotech Index was up more than 2%. Micron Technology shares rallied about 4.8%. It was after the bell yesterday. Micron gave a bullish forecast for both sales and earnings, and analysts were especially positive on pricing trends for DRAM chips as well as improving demand for enterprise customers. And Micron and Western Digital today each reportedly exploring a potential deal for Japan's Kioxia Holdings. Apple also moving up to the upside after being rated buy over at UPS. The firm cited a more stable long-term picture for iPhone demand, and UBS also citing the option value of Apple's likely entry into the auto market. Shares in Apple, the most heavily traded in the U.S. session today, posting a gain of about 0.7%. Now, the U.S. bond market will be open tomorrow, and that is because the government will report on March employment. Ahead of those numbers, 10-year Treasury last quoted in New York down nearly 7 basis points to a yield of 1.67%. I'm Doug Krisner, and that is your Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening to Bloomberg Business Week. Carol Masser along with Tim Stenovic in our Interactive Broker studio. This story now, our most read on the Bloomberg in the past 60 minutes, and it just hit the Bloomberg just about 15, 20 minutes ago. We want to bring in our editor-at-large, Eric Schatzker, and this is about, of course, the big block trade blow-up that we've been talking about all week and the individual and the firm behind it, and we continue to get more information. So, Eric, this is an update on this story. It's a Bloomberg exclusive. You and Sri Natarajan and Chanali Basak putting it together. What do we know? What's the new news?
Carol, what we're really beginning to figure out is how Bill Wang and his family office, Archegos Capital Management, were able to amass a portfolio that some people familiar with his accounts now put at $100 billion. Can you believe that number?
Wow.
But here's what happened. If you do business in swaps, this is a type of derivative that allows a client and a bank to do business with one another and netting out the difference in the value of underlying assets, say shares of Viacom, which is one of his big positions. If you do business that way, you can hide your presence, not just from other investors in the market, you can hide your presence from other banks. Because the banks are so eager to cultivate your fees, right, to win your trades, that they agree not to share information with one another. And so Bill Wang was able to exploit that level of ignorance, let's call it, among different banks to pile up leverage on positions in the same shares.
Right.
You see, if you're a bank and you have a client like Bill Wang who's piling up leverage in a small number of stocks, and he starts to blow up, it's one thing to unwind that account. It's another thing to unwind that account if all of the other banks on Wall Street are trying to do the same thing. It becomes a rush for the exits.
Mm-hmm.
And that's exactly what we saw last week. It's like pouring gasoline on the bonfire.
But this happens all the time? Can I make that assumption?
No.
Oh.
Can you think of anybody else who amassed a portfolio of $100 billion? I can actually. Long-term capital management, right? Long-term capital management back in 1998 had capital of about $1 billion and was levered 100 to 1. Now, to Bill Wang's credit, or maybe to his bank's credit, they didn't lever him up 100 to 1. We understand that the amount of equity or capital he had at risk was as high as $20 billion. But with a $100 billion portfolio, we're talking about 5 times leverage.
Right.
He was a whale of almost unprecedented proportions. And it's the size of his portfolio, in part, and the amount of leverage that he was given that made him so vulnerable, right? That's what caused him to blow up like a supernova.
So maybe a better question was, it's amazing that this didn't happen to somebody, right? Because in other words, the system allowed for this to happen. So it's kind of amazing that maybe it didn't happen before.
This is a very, and as a matter of fact, we should be wondering who else is lurking out there that may have done the same thing. It was not that difficult to figure out that the level of opacity that he was demanding from one bank, he could use. You know, I think of it as information asymmetry, right? The bank, he knows and the banks don't know. And so he's taking that information asymmetry and using it to his advantage. And it was only, this is what we learned, it was only at a meeting either on Wednesday or Thursday of last week that the banks found out how much risk each of them had to Bill Wang. I mean, this is just incredible.
It's amazing
For several years he's been building up this leverage and none of the banks knew.
It's amazing that they didn't come across, like, I would imagine that David Solomon or Jamie Dimon or somebody ran into one another and like, hey, or I guess they wouldn't talk about it, right? Because they would be showing their hand.
This is the thing, and it's one of the guiding principles in this business. It applies to hedge funds and it applies to large family offices like Archegos was. There is a code of silence. If the prime brokers who are providing you the leverage start to share information with one another, who's to say that they won't share that information with another client and arm that client with information to trade against Archegos? And so silence is the credo, and it is the reason that a David Solomon and a James Gorman or a Jamie Dimon wouldn't have a conversation about an individual client, right? They demand that kind of secrecy, and frankly, they should get it. The bigger question, however, is whether there should be more transparency into the kinds of positions that Bill Wang was building up. And as a matter of fact, the industry now expects it. There are going to be consequences, just like there are elections have consequences, right? Spectacular blowups have consequences too.
So what could regulators do to prevent something like this from happening again?
Well, one of the things they could do is demand that the party with the ultimate economic interest in a trade, in this case, Bill Wang, as opposed to his prime brokers like Nomura or Goldman Sachs or Credit Suisse, be the ones to report that they actually have that economic interest in the underlying asset. It could be shares of Viacom. It could be shares of Baidu. It could be shares of Tencent Music Entertainment. These were among his positions. But you wouldn't have known that because if you looked at the list of holders on a Bloomberg terminal, for example, Archegos never showed up.
Right.
Prime brokers did. What you didn't know as an investor is that they were reporting those shares on behalf of somebody else.
It's a great story, and it's read it all, everybody. It's on the Bloomberg terminal. Eric, thank you so much. Eric Schatzker. We do need to get to Dave Wilson on his stock of the day. Dave, what do you got?
Applied Molecular Transport, Carol. It's a developer of biologic drugs. The company's working on oral treatments for ulcerative colitis, rheumatoid arthritis, and other medical conditions. Applied Molecular was founded in 2010 and made its initial public offering last June. The ticker is AMTI. Applied Molecular sold shares in the IPO at $14 each. They climbed 28% on the first day of trading and took off from there. Last month, they reached a high of $78.22. That's a more than five-fold gain. Applied Molecular then retreated even after posting a narrower fourth quarter loss than analysts expected in the Bloomberg survey. The drop reached 48% after the company filed Monday to sell more shares. Now, Applied Molecular completed the sale late yesterday at $42 a share. It raised $105 million. And today, the stock bounced back in a big way. It was up almost 44.5%. And that was the stock's biggest gain ever.
All right, good stuff as always.
6% this year.
Not too shabby, right?
Yeah.
All right, Dave, have a good weekend. Tim, have a great weekend.
Thank you. You too.
Good holiday weekend. I'll see you on Monday. All right, let's get to World and National News. Over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. The White House says it expects President Biden's massive infrastructure plan to be introduced in Congress by Memorial Day and then passed by summer. The multi-trillion-dollar package would cover roads, bridges, airports, and train terminals, as well as broadband access. To pay for the bill, the Biden administration wants to raise taxes on large corporations and wealthy taxpayers. Republicans say tax hikes are a non-starter. But White House Press Secretary Jen Psaki says right now some of the nation's largest companies don't pay any federal taxes.
I will say that in the wake of the 2017 tax giveaway to corporate America, I should say, 91 of the Fortune 500 companies paid no federal taxes. Zero federal taxes. That is not something that the American people believe is fair, that we believe is fair.
Psaki says the administration is hopeful it will be able to find some common ground with Republicans. The paramedic dispatched to the scene of George Floyd's arrest says he did not see Floyd breathe or move when he first arrived. In day 4 of the trial of former Minneapolis police officer Derek Chauvin, paramedic Seth Bravender says he was convinced that Floyd was already dead.
He was unresponsive and wasn't holding his head up or anything like that.
Bravender says he soon established that Floyd was in cardiac arrest. Chauvin is accused of causing Floyd's death by kneeling on his neck for about 9 minutes. Earlier today, during the trial, Floyd's girlfriend recounted their on and off drug abuse. Defense attorneys are expected to argue that may have contributed to Floyd's death. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. So it's not quite Friday because tomorrow's Friday, and that's pizza day usually in my household. But listen, we've talked about restaurants and the restaurant business a lot over the last couple of weeks here on Bloomberg Business Week. And our weekend show features an interview that we did with the Blaze Pizza CEO, Mandy Shaw. And here's a little clip from the interview in which Shaw talks about what it's like to be in business with none other than NBA champion, legendary basketball player, LeBron James.
One word, fun, right? It's
Yes.
so exciting. You know, LeBron is a great partner in that he actually cares and he makes selective choices about who he, quote, gets in bed with, right? And years ago, he decided to come to Blaze because of our philosophy of clean ingredients, better food, better for you, you know, a new way to pizza, upgrades. And so it's a rather informal partnership that just really is fun. Anything that we offer up to him, like those viral videos, he just says, yeah, let's have a good time with this and see what we can do. And it's really just part of his portfolio. And Blaze wins when he wins and vice versa. So it's a very nice additive part to what the Blaze persona is for sure.
All right, and again, that's just a little clip of an interview that is in our Bloomberg Business Week weekend show with Tim Stanovic and myself, and that, of course, was the Blaze Pizza CEO, Mandy Shaw, where she was talking about being in business with LeBron James. He's been invested in the chain for several years, a franchisee, owner, and investor in the overall chain, and you can hear all of that in the entire weekend show. You can find it on our podcast feed at Bloomberg.com. Also check it out on Bloomberg Radio over the weekend. But what's interesting, too, this is a chain, it's a younger chain. I think they've been around for about a decade or so, but they've got a lot of restaurants across the United States. They're also in Canada and the Middle East, and they are definitely looking into expansion plans. And they really talked about in the interview, Mandy talked about what it was like during the pandemic and what they plan to do when it comes to 2021 and looking into growth for the coming year. You're listening to Bloomberg Business Week. I'm Carol Masser in our Interactive Broker studio. This is Bloomberg.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
So it was the beginning of the second quarter today, and it was the last day of trading this week, given the market will be closed in observance of Good Friday tomorrow. That is the equity market. The bond market will trade because the government will report on March employment. The data expected to show the quickest pace of hiring in about 5 months. Special coverage of that data beginning tomorrow on a special edition of Bloomberg Surveillance. The non-farm payrolls data will be released at 8:30 a.m. Wall Street time, so you can join us then, or earlier if you'd like. So today we had the S&P 500 finishing at an all-time high, strength in energy leading the advance. Energy shares tracked the price of crude oil higher. WTI was up about 4% in New York after OPEC Plus agreed to increase production gradually from May through July. S&P today with a gain of nearly 1.2%, all-time high 4,019. For the Dow, a gain of about 0.5%, and strength in information tech shares leading the NASDAQ composite higher by about 1.8%. Want to highlight Micron Technology. Late yesterday, the chip maker gave a bullish forecast for both sales and earnings, and analysts were especially positive on pricing trends for DRAM chips, along with the improving demand from Micron's enterprise customers. Today, the stock was up a little more than 4%. I'm Doug Krisner, and that is your Bloomberg Business Flash.
All right, Doug, really appreciate that. Well, leadership, we've seen it hard at work this past year. Sometimes we've respected it. We've often questioned it. We've talked about it with many leaders this year who were managing and leading teams, companies, institutions, communities through the pandemic without a playbook. Well, here are some thoughts on how to lead in a world that is changing faster than many planned. Is Henry DeCio. He is former COO of the 2008 Obama campaign, was deputy assistant to President Obama during his first term in office. He's also author of Campaign Inc., How Leadership and Organization Propelled Barack Obama to the White House. He's got a new book out, Changemaker Playbook, The New Physics of Leadership in a World of Explosive Change. And he joins us on the phone in California. Henry, so nice to have you here. Welcome to Bloomberg Radio.
Thank you. Hi, Carol.
Hi. So tell me a little bit about, first of all, your year and how it's been.
You know, I mean, it's been a tough year, right, for everyone. But
yep.
We've made the most of it. We spent some of our time. We live in Washington D.C. area, but we spent some of our time in California, in the mountains. So we've taken our kids; they're homeschooling, and we're trying to help. We're trying to help them sort of have a new experience out of this.
Yeah, which is a smart way to look at it, right? Especially when you've got kids, because that's been really tough for all of us. How did this year kind of shape, you know, kind of finishing up this work on this book and then getting this book out? Because it is all about leadership and how we can all be leaders. And we've seen the world change so quickly, so dramatically in the past 12 months.
Yeah, I mean, for me, you know, it's interesting because almost the day that we were called into lockdown, kids come home, wife comes home from work. The day I started writing the book was when lockdown happened. So I suddenly had, suddenly had three coworkers in my house, three new coworkers in my house, and we had to learn as a family how to navigate the pandemic as coworkers. As much as my kids are 13 and 11. So we had, and at that time, I think 12 and 10, something like that. So we had to figure out how to restructure our homes so that our kids now have two bosses, right? They have their teachers online. They have us. We're now very involved in their education. And then we are also working inside of our new workspace together. And then also we're interacting with the world on Zoom. So it was an adjustment for us as a family, for sure.
Well, listen, and I love that you use the word, Henry, adjustment, because we've all had to learn how to adjust really quickly and constantly. Like the world as we knew it just did a 180 overnight. You know, you weren't at your offices, you were home, your kids were at home, in school, you couldn't go to the store like you could so easily. I mean, just everything was turned upside down. We didn't have the playbook. And I feel like we now maybe have the workings of a playbook for a world where we need to be more flexible and ready for change.
Right. So I started writing the Changemaker Playbook with the idea that I had been working for 7 years with the world's leading social entrepreneurs and change makers through my work at Ashoka Innovators for the Public. And I'd spent all around the world, I'd seen how these leading change makers navigate tackling the society's toughest problems, but also navigate a world of change. And so I was already sort of in this when all of this happened. And what was striking to me was the biggest aha moment for me over these last 7 years coming out of the White House is that the world has shifted from a one leader at a time world, that siloed, hierarchical, repeat your skills faster and faster world, to a world where everyone is leading in every moment. And that means that when everyone leads, everyone makes change, because that's what leaders do. So if everything you change changes everything, and everyone is doing it, you're no longer in that repetitive, make change linearly faster world. You're now in a world of everyone a change maker. And this world is explosive, omnidirectional, and the physics of leadership from one leader at a time to everyone leading are polar opposites.
How does that fit, though, within the traditional structure, though, of companies or institutions or government where there are, though, designated leaders?
Well, it doesn't fit. And I'm also saying it's not everyone the leader, right?
Yeah.
It's everyone a leader. In this world now, we know the new business strategic landscape is fast and fluid. It's changing all the time. It's disrupted. The old world was sort of, it was evolving. But now we're in a world that's being revolutionized all the time. So you can't look at the world the way you used to, and you can't run your organization the way you used to. We're in a world of change makers. So you have to build your organization to accommodate change makers.
What do you really mean by?
You have to have change makers in your organization.
Wait, I'm sorry. Go ahead. I interrupted you.
That means you have to have change. No, I'm sorry. That means you have to have change makers in your organization.
And we've got about 45 seconds, and then we'll come back and talk some more. But what do you exactly mean by change maker?
So the new DNA, the new human DNA, really, across society, innovative mind, service heart, entrepreneurial spirit, and collaborative outlook. That's how we see ourselves in the world today. We have rising individual agency and the tools of change at our fingertips that were once only available to a few, and the democratization of leadership. That's just revolutionizing the whole strategic landscape.
Hey, Henry, sit tight for a second, because I want to get into the role of empathy in this, because it has a big role. And I'm also curious, what are some of the change makers that you kind of admire and watching today? Henry DeCio, he is former CEO of the 2008 Obama campaign. He's got a new book out. It's called Changemaker Playbook, The New Physics of Leadership in a World of Explosive Change. Really describes the environment we're currently in. We'll continue in just a moment.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
And coming up, we're going to get back to our conversation with Henry DeCio. He's got a new book out, Changemaker Playbook, and just talking about leadership. We're going to get into the importance of empathy when it comes to leadership. First up, though, let's get back to some of your top business stories. I'll look at those closing numbers once again. Here is Doug Krisner.
Yeah, last trading day of the week will be closed in terms of equity action tomorrow in observance of Good Friday. However, unusual that the bond market will be open, and that is because the government will be reporting on March employment. This data expected to show the quickest pace of hiring in 5 months. However, today's numbers on weekly jobless claims showed an unexpected increase. Maybe that created a little bit of nervousness. 10-year Treasury down in yield today by nearly 7 basis points to 1.67%. In terms of the equity price action, a record for the S&P 500. We broke above 4,000 today for the first time with a gain of nearly 1.2%. 4,019. Energy out in front of this advance. The big energy names tracking the price of crude oil higher. WTI in New York was up nearly 4% today after OPEC Plus agreed to increase production gradually from May through July. Also a lot of strength in information technology stocks, and that was the driver for pushing the NASDAQ comp to a gain of about 1.8% today. Micron Technology advancing more than 4%. We'll remember yesterday the bullish forecast for sales and earnings, and Apple today upgraded to buy from neutral at UBS. A lot of optimism around iPhone demand and also Apple's entry into the auto market. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, got it, Doug. Thank you so much. I want to get right back to our guest. We're talking with Henry DeCio. He is former CEO of the 08 Obama campaign. We're talking about his book, new book, Changemaker Playbook, The New Physics of Leadership in a World of Explosive Change. He was also deputy assistant to President Obama during his first term in office. Henry's still with us on the phone in California. Henry, something that struck me as I was going through your book, and that was the importance of empathy. And I what's interesting is I'm having conversations with a lot of CEOs, leaders at companies, heads of institutions, and we're talking about, you know, they've seen their workers come under so much stress, so much pressure over the last year, working from home, juggling a lot. And someone said to me, maybe what we need is a chief empathy officer. And I do think, you know, empathy put to use can make things so much better, and we can all learn a lot. Tell me, though, about the importance of empathy and as you see it when it comes to change making.
Absolutely. When you live in a world of explosive change, but also you have the tools of change at your fingertips. You need to know, Carol, that I'm going to make my change, understanding how my change affects your change. And similarly, I want to know that you're using your change responsibly in the world. So it used to be in the one leader at a time world, you needed to have a hard skill and just enough empathy to get along. But in this world where problems are outpacing solutions, we have to come together around challenges and opportunities, and where this world is highly interactive, empathy is the foundational skill for change making.
Okay. So is there anybody in particular when you think of that you've really seen it done well?
I really felt, and I write about her in the book, I thought Michelle Obama did a fantastic job. She brought leaders together around complex problems, around children's eating and diet and nutrition and healthy living.
I mean, she brought food retailers there, right? And we know, like, there's a lot of food out there that is not good. I mean, if you think about that and having a conversation with them, it's pretty amazing.
She did a fantastic job, and she used her informal influence really skillfully, even bringing her White House chef, who understood healthy eating, to some of these meetings with the retailers you're talking about. Walmart was at the table, the restaurant chain, Red Lobster, people from Red Lobster were at the table. So Big Beverage was at the table, and they were all engaged in thinking about how to improve the lives of children in this country.
So, I do wonder too, as we move forward, And I feel like everybody is thinking a lot about leadership. I mean, political leadership. Like here we are, we have a president who's talking about, spending for the future, long-term spending that could change the trajectory of the United States going forward. But it does feel like policymakers, are so short-sighted. I mean, how do we need to apply this, or how do you see it or not see it when it comes to government?
Well, I think there's going to have to be a change across society. So certainly government has a piece of this too. But imagine, again, like I said before, we're in a change maker world. So imagine if you're a teacher and you see change makers coming through your doors and not students. How would you build that differently? Similarly, if you're a CEO, you see change makers coming through your door and not customers, consumers. You would build it differently. And in government, it's particularly a challenge. We've got to see change makers in our communities, not taxpayers, because the ability to really fight problems today is going to be the new KPI is how many of our people are change makers.
So, okay. So, you mentioned Michelle Obama. When you look out at the corporate world, is there anybody who kind of inspires you in that way?
Well, I'll tell you who, I didn't write about him, but I'll tell you who really inspires me now during the pandemic is Anthony Fauci. Because he's had to manage his expertise through all of this, but also be relatable. We don't really want experts talking down to us. He talks to us like change makers. He gives us information that we can act on, and he's also relatable, right? He can put on the Nats ball cap and throw out the first pitch.
Right.
So I think he's navigating this, and by the way, a very, very difficult terrain for a medical expert right now. I think he's been completely skillful in how he's done this.
So I'm thinking for our audience, it's a smart audience. It's often an audience of leaders too. What would be something what's an actionable item that they could take back to their teams in terms of leadership and what you've been talking about and this whole concept of change makers?
Well, I found, again, that if you understand that the people in your organization are change makers until they get to work, or until they get to school, right? I think the challenge for people, again, we all relate innovative mind, service heart, entrepreneurial spirit, collaborative outlook, but are we really building a structure that accommodates that inside the workplace? Because when you do, you're going to unleash change makers who are going to help drive your mission forward in a very different and unique way. And it's powerful and it's exciting.
Well, Henry, nice to talk with you and certainly inspirational. Good luck. And stay safe. Henry DeCeo, is former CEO of the 2008 Obama campaign, worked in the Obama White House, and he's got a new book out. It's called Changemaker Playbook, The New Physics of Leadership in a World of Explosive Change. All right, you are listening to Bloomberg Business Week. Just a reminder, Dow Jones Industrial Average finishing with a 171-point gain, S&P up about 47 points, and the NASDAQ a gain of about 233 points. We once again, second day in a row where we saw investors plowing back into some of those tech names. That NASDAQ up about 1.75 percentage point. All right, let's get back to news. For that, let's check in with Nancy Lyons. She's in D.C. Hey, Nance.
Hey, Carol. George Floyd's girlfriend detailed their relationship during testimony today in the trial of the former police officer accused in Floyd's death. Courtney Ross cried as she told the story of how they first met and also talked about how they both had an opioid addiction.
Addiction, in my opinion, is a lifelong struggle. So it's something that we dealt with every day.
Ross says she saw slight behavioral differences in Floyd that made her suspect he was back to using. Defense attorneys are expected to use his drug use as a possible cause of death. Well, there's a big media win for companies at the nation's highest court. Bloomberg's Karen Chase with details.
The U.S. Supreme Court let the Federal Communications Commission ease limits on the ownership of local media outlets. The court sided with the broadcast industry and former President Donald Trump's administration in a long-running fight. The justices unanimously said a federal appeals court was wrong to block the changes. The appeals court had told the FCC to first study the potential impact on female and minority ownership in the media industry. I'm Karen Chase, Bloomberg Radio.
A new report is highly critical of U.S. Capitol Police over their handling of the January 6th attack on the Capitol. The report by the police department's Inspector General, obtained by CBS News, says Capitol Police failed to act on intelligence that suggested there would be a large violent event targeting Congress. Inspector General Michael Bolton cites multiple deficiencies, including the department's failure to pass along intelligence from outside sources before the attack. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, so big time this week, we were looking at how work has been impacted by the pandemic, and a company that's got a great window into that, is Microsoft, which came out with another round of data points about how we've been working through the pandemic and kind of where we are today. So in keeping with that, we talked with him earlier in the week. Our Business Week weekend show features our interview with Jared Spataro. He's VP over at Microsoft 365, a corporate VP, on how hybrid work is the next great disruption. In this excerpt, Spataro discusses how workers and employers can come together for the future of work. Check it out.
When we talk to workers, we hear that over 70% of them want flexible remote work to stay in some form. So in other words, they're saying, I like the flexibility. Just anecdotally, when I talk to people on my team out here on the West Coast, they say things like, you know what, I'm eating breakfast with my kids for the very first time. I've never done that before. I'd like that to stick around. So they like that. At the same time, those same people, 66% of them, say that they want more in-person time with their team. So they're saying, please give me flexibility, but at the same time, give me the opportunity to get back in person. Now, when we look at managers or leaders, on the other hand, they are recognizing that flexibility is valuable. Over 80% of them plan to keep more flexible remote work from home policies post-pandemic. So I think the meeting, the way I would term it, is we want the best of all worlds. We want people to be able to work together, workers and managers, to find kind of that best of all worlds setup so that everybody is getting things that benefit them. And I believe that, there's a bright future ahead if we'll grab onto that and work together.
Yeah, we all want it all. No doubt about it. That was Jared Spataro. He's Corporate Vice President at Microsoft 365, talking about hybrid work, the disruption of hybrid work specifically. And this was really part of an overall Bloomberg Live virtual event that was all about work shift and how it is changing because of the pandemic. And you can hear more of that interview. It is on our weekend show at Bloomberg Radio and on our podcast feed at Bloomberg.com. You can also go to Bloomberg Live. There's lots of these work shift conversations from our virtual event on Wednesday. So I highly recommend that you check that out and check out our podcast feed and our weekend radio show. You're listening to Bloomberg Business Week. I'm Carol Masser. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
A record high today for the S&P 500, the benchmark breaking above $4,000 for the first time. But let's apply a little bit of context here. It took nearly 5 years for the S&P 500 to get from 2,000 to 3,000. It broke above $3,000 in July 2019. You know, this latest 1,000-point trip took about 21 months. Today, we finished with a gain of nearly 1.2% to 4,019. Now, where the Dow is concerned, a gain of only 0.5%. A lot of strength today in information tech. That helped to lead the NASDAQ composite to a gain of about 1.8% today. Apple was the most heavily traded issue. Stock was up about 0.7%. The analyst over at UBS called the stock a buy, and the firm cited a more stable picture of long-term demand for the iPhone. And at the same time, UBS cited the option value of Apple's likely entry into the auto market. And we had Microsoft climbing for a second day. We were talking yesterday about the company's multi-billion-dollar deal to build customized versions of its HoloLens goggles for the U.S. Army. That is moving forward. So if you look at the bond market, big move lower in yield today with the 10-year last quoted at 1.67. It's the last day of trading, I should say, for the equity market, giving a Good Friday tomorrow. But the bond market will be open because we've got the government data on March employment and special coverage for you here on Bloomberg Radio. I'm Doug Krisner. That's your Bloomberg Business Flash.
Get ready to be pretty jealous, Doug Krisner.
Why?
Because just listen up. You were just in California, so listen to this.
I was. Oh, that sounds like a Cabernet from about, 98?
No, it's a Chardonnay from 2019, but just as good. All right, so you sit tight, go back to news, because I've got a great guest I want to bring in, because we love talking about wine. I love talking about wine, and we have the perfect guest to do so as we wrap up this holiday-shortened trading week. Don't forget that we do have the jobs report tomorrow, and we're going to talk about jobs, too, in this interview. Let's bring in Rick Tigner. He is president and CEO of Jackson Family Wines, and he is here to talk about the wine industry, but also about the company's A Really Good Job contest. He joins us on the phone from Santa Rosa, California. First of all, thank you, because you've shared some wine with us, and I'm going to wrap up my day with your Chardonnay. How are you?
I'm doing great. How are you?
Doing well, doing well. It's been a bit of a crazy year. What's your year been like?
Oh, my God.
Where do you start, right?
Yeah, 12 months later, right? But, yeah, obviously when the pandemic hit last March, no one knew what that was going to be. And I think everyone thought it was going to, end relatively quick. But it had its challenges. And, we've been resilient as a company. We've survived. We've grown in areas that we probably wouldn't have grown in, like the digital, part of our space. People had to channel shift.
Right.
And then this opportunity came up to create a promotion around this really good job campaign, which we did about 10 years ago. And it had good results back then. But we thought, couldn't be a better time right now with unemployment as to be what it is. There are people out there that need to kind of pivot in their current careers or get a new career. So we thought it was a really good time to relaunch the Really Good Job campaign.
Well, it's funny, when I was doing some research and reading in for this, I was like, wait a minute, this looks like they have done this before. Tell us about your Really Good Job contest, because we were reading about it and talking in the newsroom, and we're like, I kind of want to sign up for this.
Well, good. You know what? It's a 4-month-long, nationwide search for a person who's actually looking to have their ultimate dream job in the wine country. And what I would say is, the sky's the limit. The last time we did it, we were kind of looking for a social media kind of influencer type of person, and we had some really good results. Now what we're looking for is really a person who, wants to really either get into the wine space, which is a lot of different jobs. Like I said, the sky's the limit. So some people, to give you an example, let's say you're in the restaurant business and your restaurant's closed last year, right? You could come out to California in the Really Good Job campaign and be on our culinary team, right? And walk out of here as one of our chefs or one of our in our culinary program. Maybe you're in sales. Maybe you want to be in hospitality. You could get that job. Every day is going to have a new opportunity. But obviously you're going to start off learning about how to make wine with our winemaker, which will be fun. And then you're going to be able to walk the vineyards and understand really how grapes are grown, right? Because ultimately that's where there's a there when it comes to making wine, and then we'll follow that person's passion. So we're very excited about the applicants, and really for me, I think I said this to somebody the other day. To me, it's like a pebble in the pond. We put a pebble out there, and the ripples have been amazing. The response has been incredible. We've gotten more applicants than we would have thought already, and we're just getting started. So we're super, super excited.
Well, and it's interesting, and I love this whole idea that like you're kind of open to, what the job might be, but it also comes with a $10,000 per month salary, if I have this right, rent-free living for a year, and all the wine you want too. This is like a win-win-win.
It's like kind of the icing on the cake, the free wine. But imagine you're out there and you're either underemployed, like let's say you make $80,000 or $90,000 or $40,000, opportunity to make $10,000 a month, right? I mean, what's a big expense when you make money? Rent or mortgage, right? So now you can live rent-free at a really nice place in Hillsburg, California. And then on top of that, you can drink, which in a moderation, by the way. You give the person like 30 cases of wine, like 360 bottles. So super excited about the whole program. I'm glad to see you're excited too.
Well, I think it's just clever. And I think, we talk so much, Rick, about, especially in this past year, and we've talked a lot about inequities and diversity and inclusion, the need for it. We've seen all the research. We've all talked about it over and over about the importance of having a diverse workforce. But and part of doing that and creating an inclusive workforce is widening out your labor pools. And I feel like this is kind of a way of doing it, like bringing somebody who you might not normally go after.
It's amazing. As a company, we have a D&I task force as an example, but imagine as we add somebody to our team is this. Teamwork's important to me is that what I'm hoping is they bring information to us. They teach us. People have different backgrounds and different histories and have different education levels. I'm excited about the people who we bring on board. They'll be able to teach us about how to become a better company. And I'm all about open door policy as a CEO. We have all kinds of ideas about open door weeks for CEOs and the rest of our executive staff. But you are right. At a time when all of these initiatives are out there, what a better time to create this campaign. So it is, it's not marketing genius because we did it before. And we probably just stole somebody's idea back then too.
We're all just taking everybody else's ideas. That's the world. It just gets passed around. Hey, listen, we just have about a minute or so left. You sent a Chardonnay, Murphy Good Chardonnay, a Pinot Noir, and a Zinfandel. Tell me about it. I've opened up the Chardonnay. Tell me what I'm drinking.
You are drinking a luscious sort of pear / apple flavored wine. It should be very balanced. It should have good structure in your mouthfeel.
It's nice.
Sometimes I say this is a porch sipping type of wine.
Yes.
So you can take it on picnics. You could have it with salads and fish, and in the Cabernet you could have with steak or pork or whatever you want. But here's what I think about Murphy Good. Look, it's a serious wine, but we have fun. We don't take ourselves too serious. So that's what I think about drinking wine as well. Have a great bottle of wine. Don't take it too serious, and just have the enjoyment.
I totally agree with you with wine. I think people overthink it and so on. Just real quickly, the Pinot Noir and Zinfandel, what should I know? We got about 30 seconds.
I would say well, first of all, this is a Sonoma County-based company, so you get the same flavors that you get from Sonoma County. But the Pinot Noir should be, I'll call it maybe lighter in style. It should be lush and kind of velvety, is what I would call it. And then the Cabernet should have more of a robust, sort of a full-flavored wine. It's kind of what I would say.
Really cool stuff. You've got to come back because you're 40 different wineries, I think, on 4 different continents. You guys are around the globe, and we love talking wine. Good luck with it. Let us know how it goes with the Really Good Job contest. If you find something for Carol Masser, a little applicant, that's me. I'm interested. Rick Tigner, he is Chief Executive Officer at Jackson Family Wines, on the phone from Santa Rosa. Folks, I'm ending my week in a really good way. I hope you do as well. Stay safe over the weekend and have a good holiday. This is Bloomberg.
this is Bloomberg Technology. Coming up in the next hour, EV stocks get a boost as President Biden mounts a major push to accelerate the adoption of electric cars. Tesla shares rise before closing down. We'll talk about it all with Wedbush's Dan Ives. Plus, the global chip shortage. How bad is it? How long will it last? More from my interview with IBM CEO Arvind Krishna. And social media spreading anti-science skepticism. How Facebook and Instagram are actually fanning the flames of misinformation around COVID vaccines, and anti-vaxxers are targeting women. All those stories in a moment, but first, U.S. stocks touching record highs. Bloomberg's Kriti Gupta has the full picture. Kriti, break down the day.
Well, Emily, you saw a lot of green on the screen. The S&P 500 in the green, of course, positive trading. And a lot of it on the surface looks like it's very tech-driven. You can see the New York FANG index, the index housing some of those big tech names, up 1.4%, but not substantially higher than the S&P 500. And that's really because you saw a lot of sectors in the green, not just tech, even energy at the top of the pack. But I really want to show you what the EV space was doing and what it has been doing for the past year, because a big question going into today's market